Guys, we got to talk about a new idea that we may not follow the 4 year cycle this time. And I'm going to give my reasonings for it. We followed the 4 year cycle for several halvings in a row, but this time is a little different. Remember, Bitcoin came about in '09. By the time the first halving actually happened, we were already 13. In 13, we were already in a bullish market. And for the rest of the halvings, we were in a bullish market. Now, you might say, last time, COVID, bear market. No, 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 no. We had we had easy money, we had low interest rates, and we even had the stimuluses. That little bear market didn't last for very long, and it didn't really affect crypto all that much. So we've had all these conditions for a very, very long time, for over a decade. You know, like when Obama came in, he kind of inherited the Bush disaster of '08. But by the time that 13 actually came around, this was after his second election, remember, and the first halving came around, the economy was like going pretty well. And ditto through 2017 and ditto through 2021. So like basically we had basically a sustained period of like 15 years of growth, albeit it is from printing a lot of money. That's true. I won't deny that, obviously. But that amount of money kind of kept the economy going, and it kept Bitcoin coming up as well and kept the 4 year cycle flowing along. What do we have this time? We have high interest rates, an economy that's not horrible, but sort of sagging, and no easy money in the market because of those high interest rates. And what do we have right now? We have the high interest rates actually making people picking bonds over more risky investments as crypto. That's something we have to take into account. Some of you are saying they finished raising interest rates. You might be right. They might have finished raising interest rates, but they did say they're going to keep them high for a sustained amount of time. That means the halving is next April. That means the interest rate is more likely going to be 5% or maybe even slightly above 5% when the halving actually comes. It depends on the next couple of FOMC meetings, the next couple of CPIs. But the thing is, by the time April rolls around, it's probably going to be 5 or 5.25. And that's far above the neutral rate. And that's just something that Bitcoin has not experienced during a halving. During all the other halvings, we've had zero or close to zero interest rates. And the easy money basically made people not want to invest in bonds because they were like at 0% basically, or very, very low, and want to invest in risky investments because of the easy money that you can get to invest in risky investments, and because the returns on bonds and safe investments were so bad. Now that situation is completely reversed. See, beforehand, you had a really good market for risky investments and a very bad market for bonds. Now the market for bonds is much higher, and it's harder to actually borrow money as well. And no one's willing to borrow money at this point because it's so expensive for the interest rates. Like, I think housing purchases are going to come down because the house payments are going to be horrendously high because of the high interest rates, obviously. Same thing with I think car prices are going to come down too. And I think the high interest rates are going to last for a year and a half, well into the halving. And the real question right now is will we have a bull run based on the halving schedule, or will we actually have a bull run based on the, when they're going to bring interest rates down schedule? Because remember, Bitcoin is a part of the general economy, and in the West, it's much more looked at as an investment instrument than anything else. I mean, we'll just say it what it is. I mean, I know people like to pretend, especially the idealists like to pretend it's not, but in the West, very few actually people use Bitcoin or any crypto for transactions. When Elon Musk announced that you can buy a Tesla with Bitcoin, I think roughly 5 or 8 people actually bought Teslas with Bitcoin. The rest of everyone else just kept their Bitcoin. They don't look at Bitcoin as a currency, they look at it as an investment. So based on that, the actual usage of Bitcoin is actually fairly low. And since Bitcoin is an investment instrument, it will obey the rules of the rest of the investment instruments. I know there's going to be a supply shock, and I know the ETF is coming in, and those things will play into favor of the halving. But if you take a gauge at what things are right now, whereas before you had easy money, so you can just take the additional money that's coming into the market and invest in Bitcoin, right now there is no more additional money coming into the market, halving or not, and you're basically depending on people reallocating their funds from other investments to Bitcoin right now. And the thing is, I don't think that money printer is going to start printing anytime soon. I think QT is about over, but QE is not going to start, and they might not start it for a very, very long time unless the economy just entirely crashes, which I don't actually think will happen. There's still plenty of high-paying jobs out there, especially if you work in the tech field. And the labor market, despite everything, is fairly strong. So a catastrophic crash does not seem to be in the cards. Like, if there is a landing, it's not going to be that hard. It might be not like super soft, but it's really not that hard. And it's not like '08 because '08 caught everyone and their mom by surprise. Lehman Brothers like suddenly fell apart overnight and that just crashed everything. The inflation thing, like realistically, even when like Obama or Trump was president, people were talking about this like, hey, this is like people were talking about this for like 10 years in a row. Hey, eventually this is going to cause inflation. Hey, we're printing so much money now that, eventually we're going to have to pay for it later. And right now we are actually paying for it. So it's people could see this from like several years out, especially when COVID hit. They're like, hey, we're printing so much money right now. We injected 40% more money into the system over those 2 years between Trump and Biden. And eventually that's going to catch up with us very, very quickly. And it did catch up with us. Now, I don't actually think it really matters who was actually president at that point. Once you print that much money, it's going to catch up with us. And of course, like the Ukraine war thing was a little bit unexpected. But even then, like some people saw it coming because the tensions between Ukraine and Russia were building since 2014 anyways, ever since they annexed Crimea. But I don't even think the thing with Ukraine and Russia is the main thing driving the inflation in our economy. It's definitely the fact that we just printed too much money over the last 10 years, and especially the last part of Trump's term and the first part of Biden's term. And now we're just suffering the consequences for that action. So the thing is, like, we're in unprecedented waters in terms of economically, and I think a lot of people still think of Bitcoin as like the new currency, the new financial system, rather than what 95% of Bitcoin investors and crypto investors actually think of crypto as, which is an investment where they can get generational wealth or a lot of wealth in a very short amount of time. Don't make a mistake about this. Like, if you're stuck in the crypto YouTube verse or crypto Twitter verse, like you might get the impression that most people that invest in crypto are doing it for the technology and world-changing implications. They're not. Most people who invest in crypto are in it for the money and to make lots of money in a short amount of time. Don't make that mistake. If you make that mistake, you're going to be holding someone else's bags. Even when you see crypto Twitter, especially like stuff like XRP, everyone's XRP, they're not talking about anything else. They're talking about generational wealth. They're talking about it going to $10,000. They're talking about buying yachts and partying in the middle of the ocean. That's essentially what the gist of crypto is. Why do you think those crappy meme coins like always come up in a bear market? Because nothing else is moving and people want to deal with something that's actually moving. So those things go up. It's the same thing with people investing in the larger coins. They're just willing to wait for a little bit longer of a time so they're not aping into those meme coins. But it does not mean that they're in it for like to change the world with technology. There's a small portion. There's probably like less than 5% of people that are actually in it for world changing or technological aspirations. Everyone else coming into crypto and all the money coming in, that's because they think they can make money. Do you think like guys like BlackRock, Fidelity, ARK Invest, do you think all those investment companies are investing in Bitcoin to change the world with this technology? No, they're investing in it because they think it can make money. And that's why everyone else is investing in it too. So don't get yourself mixed up with that. Based on that, like to invest in something to make money, there has to be money out there in the first place. And right now, there's no money out there in the first place. Now, I don't really know how much money is going to shift over into Bitcoin because of the ETFs. That's a really, really big question. And if that's a really big amount, this theory could be wrong. It could still follow the 4-year cycle because the ETFs are playing very, very nicely into the 4-year cycle timeline. But the overall economy really isn't. Now, it helps that we didn't actually shut down today, but that's still like one of those small preliminary things. And the overall Fed decisions looks like it's going to stretch out to 2024, possibly to the end of 2025 even. And like if that happens, like we might not get a bull run until 2025, 2026, which would actually blow the whole 4-year cycle apart. So I'm not really sure if the ETFs are going to be quite enough to get a bull run. I hope I'm wrong, and they are. And despite the interest rates, people will allocate like other funds that they actually have in bonds into crypto. But that's kind of a hard bet. Although like the rates are going to start coming down towards the second half of next year. So all these things combined could actually make us have a bull run then. but we could also delay the bull run until like 2025 or 2026 when things actually get back into order and when the interest rates come down. So that's the news for today. Let me know what you think about the theory. Let me know when you think when the bull run's actually going to be, and I will see you guys later.